screen. Let's continue with those earnings reactions then. RR Kabel is the next company on our radar. The stock is, by the way, down 4%, reacting to what was a little bit of a weak performance in the second quarter, with the margin coming under pressure and the volume growth being at around just about 3.8%. We have Rajesh Jain, Chief Financial Officer of the company, now joining in. Thank you very much, Mr. Jain, for being with us. So let's start right there, because if I look at the actual numbers on the margin, your gross margin has fallen from 20% to 16%. And the EBITDA margin has come down from 7.5% to 4.7%. So that's a sharp knock. Is it due to commodity price issues? What's the reason? And what makes you confident that this will reverse and improve in the second half?
Morning. Yes, our margin, whatever we have seen downfall in EBITDA, is directly linked with our reduction in gross margin only. And in last quarter, we have seen like a high impact of copper volatility. Since we are more in copper business, so we had more impact, which is directly impacting our B2C line, where we are not able to pass on the complete impact of high volatility. So at the same time, what happens ki if we see historically also, we were always able to pass on this pricing with some lag impacts. So that's why we are confident that again, this was one of the quarter where we could not pass on the complete impact, but in future it will be again back to normal. So we are quite confident that again we will be in the range of normal what we were doing in earlier years.
Sir, that requires a little more sort of understanding, because typically one would imagine that for a wires and cables company, commodity prices, most of it should be a pass-through, right? But what's the reason you can't pass it on? Is there a lot of competition in the market? You do not want to take price hikes right now? And again, I go back to the main question. What makes you confident that it will normalize in Q3 and Q4? I mean, are there price hikes being planned, or you're just banking on the commodity price itself cooling off?
So there are two parts again. When there is very high volatility, like there was sharp rise, and by the time we were trying to increase our pricing, again copper went down and market sentiments were not good, so we were not able to increase our prices very immediately. At the same time now, since copper prices again are in very limited range, and as per our normal practice, whenever there will be a downward or upward correction of 3%, then we'll keep changing our prices to what we were doing earlier also. And again, it is very normal. Though in this quarter, the complete hike in price could not be passed on, but in normal way, we'll be able to pass on. And that is why that we are thinking that in Q3, Q4, again, we will be on normal track.
Okay, all right. Hi, Mr. Jain. Good morning. Well, you've clearly been quite aggressive in the volume front, it appears, and it's come at the cost of margins. But still, if you compare it with your peers, the volume growth is not as much and the margin contraction is more. So let's get a couple of numbers out of the way. Earlier, when you joined us, you said you all were guiding for volume growth of close to 20% for the year. What is the revised number? Can you do that for the year? Point number one. Point number two is, on margins, you were saying that you can improve by 100, 150 basis points in this year. Is that still on? What is the margin number we should work with?
So when we talk about H2, normally historically for this industry, always H2 is better compared to H1 in terms of volumes growth. Most of the growth comes in H2 only. At the same time, like when we talk about volume growth, yes, earlier we were expecting 20% volume growth, but now since our H1 was not that much great, so now we are expecting that we'll be in the line of growth of 15% volume growth I'm talking about. And margins also, since H1 is very off the track, and we were not what we were expecting, and it is down by almost 3%. So now we are expecting that at normalized level, we'll be in EBIT margin in wire and cable, particularly in the range of 8 to 8.5%.
8 to 8.5%.
Which is our normal margin expectations.
Okay, 8 to 8.5% is still an improvement from what you did in the past quarter, but it's still lower than what you had guided for earlier. But we have taken that on board. The FMEG business, so there has been some growth. You've clocked close to around 482 crores odd. I recall we were having this chat earlier when you said that at 1,100 crores, you could probably break even. So can you do 1,100 crores in this fiscal year? And would that mean that the FMEG business breaks even?
So on yearly basis, of course, there will be some losses, but when we see on quarter basis, maybe by Q1 of next year, will be EBITDA positive in FMEG sector. And at the same time, like of course we were, I think when we compare with peers, our growth in FMEG was best, and even margin improvement was best in the industry in terms of like almost 25% growth in top line and 400 to 500 bips margin improvement in FMEG. So by that way, we are on track in our FMEG business.
So break even in the FMEG business by first quarter of next year. And also now give us a guidance on the total top line for FY25. How are you likely to close the year?
So like when we talk about revenue, like almost 12% up in first half, and we are expecting that in second quarter also it may be in the range of 15 to 18%. So overall, we are expecting 15% to 18% top line growth.
Okay, all right, 15 to 18% revenue growth for the year, we got it. Also your export business, I think, is close to around 24% of your total mix. There are signs that the globe is slowing down itself. Is there a risk to this export number, or do you believe business will be okay? And also, when you grow by this 15 to 18%, what should your mix look like between domestic and export business?
Yeah, so export was largely impacted due to like shipment crisis, and what happens like since our majority of export is to Europe, and there were delay in shipments, so few of the orders we could not clock or execute also on time. And now, but still, like now we think our export growth may be a little bit lower or at par with last year only. But at the same time, domestic is expected to grow at 15% in this second half of this year.
Okay, Mr. Jain, we'll leave it there. So thank you very much for joining us, and we wish you, the best of luck as you try and sort of improve on some of these matrices that you told us, margins especially. Thank you once again.